Crude oil prices continued to trade bearish last week, hitting the lows close to $56 levels here before closing the week above 57. Are we done with the lows, or can we expect oil to breach below the double bottom levels at 55 and head all the way towards 50? What should be our strategy in order to profit trading crude oil in the coming week? We are going to see here with the help of charts and indicators. This is a weekly forecast. I do share my daily updates for crude oil, first with the Asia and Europe session, next before the US session, so that you can profit across sessions. Subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live market updates and join the channel memberships here on YouTube to support the effort. Let's start. Towards the end of the update, I'll be sharing the trading levels. So first, let's have a look at the weekly charts. Now, few key points here on the weekly charts. Double bottom at 55, very crucial to trade below 55. And yes, if it trades below 55, the possibility of a move towards 50 will be very high. If not in this month, then possibly in the coming month. But yes, breaking below 55, the bearishness might prevail. However, it is possible that it can try to breathe this for a while and bounce back. This one possibility you should not ignore. And thus 55 plus minus $0.5, you should keep a cushion on. But let's have a further detailed look. What's happening? The moving averages are trading with divergence here, trading bearish, looking downwards. Look at the divergence. Last week in my weekly forecast, I have mentioned that prices are giving a breakout. It had a very good support here at 61.5 first and then 60. It has breached both the support levels, and hence the possibility of a move towards 55 will be very high. It has now moved closer towards 55. That is one observation. But now look at the last three candles. See the bearishness here, here, and here. You can see diminishing body size. The body sizes are getting smaller. It suggests that the bearishness is getting, you can say, the bearishness is getting diminished as well. And it appears to have approaching the bottom here. That is one possibility. It means the $55 levels are going to remain a crucial support. Also, if you look at the last two moves, you can find out there was a slight positive slope here. Higher lows are seen. So this complete zone between 56 and 55 you should be cautious of. Now the next thing is what you can see, the 5-period moving average has offered it a little resistance. So if now oil price starts to move upwards, 58.6 and 59.660, these are the levels which are going to remain crucial for oil to breach beyond. Any move beyond 60 should again be a good confirmation for a bounce back towards 61.5 61.8 zone. That is the next resistance zone. And if these two levels are taken, possibility of a reversal will be high here. But right now when you look at the divergence here, this is an exponential drop here. It means more bearishness is prevailing as of now. Look at stochastic. This is coming towards an oversold zone. Notice it hits such bottom, it generally bounces back. So coming couple of weeks are going to remain crucial here for crude oil. Either it may trade range bound, or a possibility of a little retracement can be expected from here. But when you look at MACD, see what MACD is doing, though it is trading at a quite lower levels, but look at the divergence here. This is certainly an indication of more bearishness. And hence you have to watch out a move below 55 plus minus 0.5. We can expect 53, 51, or in fact 50 levels as well. We have to watch out. See, also look at the move here, rise, retracement, drop, retracement. Now again looking downwards, even if it delivers 2 to 3 candles, bearish candles from here, possibly the prices are going to head below 50. RSI looking downwards, which is again a bearish indication. Coming to the daily. Now on the daily charts, in my last update I had mentioned, see, it was trading range bound here, 61.5 till 65.66. It was trading range bound here. And we have discussed in our daily and weekly update that it is giving a breakout, and this indicates that there could be more downside from here in crude oil prices. That is what has happened. We have seen prices moving now close to 56. Now the second thing here is, if you look at the move here, see first this resistance at 61.5, 61.8. Then we had seen a good dip, a retracement, and throughout the week we have seen prices trading in this bearish channel. Now if you observe the channel, you can find out lower highs are seen, lower lows are seen. So yes, this zone between 58.6 59.6 is going to remain one crucial zone, and then 60. Till 60 it has got very strong resistance. Beyond 60 is where we can expect bullishness to prevail. Then you can expect 61, 61.8 and 62.5 levels. But right now it is not showing such a strength. If you look at the daily charts as well, every drop follows with a slight greener candle, drop, slight greener candle, drop, slight greener candle. So the opening of the coming week is very, very crucial. If you see it is staying below 56, 55.8, stay short for possibly 55, 55.2. And if that is taken, more bearishness should prevail. Now, notice another way to look at it is drop, retracement, or sideways movement. Then the drop here. Now, if you connect the lows and the highs, you will find that on the daily charts, look at the channel here. This is the channel it is creating and it is almost at the bottom of it. So a possible retracement in oil towards 62, 64 zone cannot be denied. But right now I'll say coming week will decide which direction it wants to take. Why I am saying so, we will see when we come back towards the monthly charts. So first let's finish off with the daily charts here. You can see the stochastic is already at bottom. Look at MACD. Now MACD on the daily charts, drop, retracement. Now looking downwards, see the divergence here is still staying strongly bearish. You can see the divergence here is pretty strong, and what it may attempt is it may try to move towards the zone minus 20 levels, which suggests that possibly a slight range bound movement with modest bearishness is what you can expect. And thus I'll say 55 plus minus 0.5 should be a very, very good support for crude oil to break below. And in fact, you can expect a bounce back and a reversal from those levels as well. If you look at RSI, this is also sitting at the bottom right now. When you see the 4-hour, on the 4-hour chart, similar observation. See, it has given a gap up last week, retrace, then a drop, then retrace, then a drop. It might retrace towards where? Retrace towards 58. And if you look at the move, this is just a channel which it is staying in. That is why I say 58.6, 59.6 and 60 are the levels which are going to hold the key for the next move in crude oil prices. Any move beyond 60 should be a good confirmation for us to stay with the bias towards 61.5, 61.8 zone and then 62.6. If these levels are taken, we can in fact expect 65, 66 again. But I think it is too early to jump onto that conclusion. If you look at 4-hour chart, see, look at bearishness, then a reversal sign has appeared and now it is trying to bounce back. So in the coming week, if you see oil prices trading beyond 57.4, buy it for 58, 58.5 and then in fact higher levels. But I think it is going to be quite, you can say the momentum is going to be quite sticky here on the upside. There are a lot many stronger hurdles for oil to break now on the upside. Why? Because see, recently we had seen a breakout here, and now since the breakout it might possibly be retracing here, but I will not say a complete reversal. So this zone is going to get crucial here for oil prices. If you see the stochastic, this is rising. The MACD, now this is interesting. Look at the MACD bottom here, then retracement, drop, bottoming here, and see it has formed a triple bottom here, now trying to cross over. So this could be the possible beginning of a slight retracement. But again, I'll say till 62.4, 64 zone is not taken, I think it is yet a retracement, not a reversal on the monthly time frame, and it has still potential for 56, 55. But as we have discussed in the preceding charts, what I do expect is a possible range bound movement for the next few sessions, where we can see little swings up and down, and there could be a confined range bound movement here. You have to watch out. RSI now coming out of the oversold zone, which is a supportive sign for the bulls as well. Now coming to the monthly charts here. Now first on the monthly charts, the drop here, and this is important because see, we had seen a double bottoming here, then a retracement. Now see, the resistance here was quite strong. Earlier in this month itself, I had mentioned that once it trades below this zone at 62, you can consider this for a breakout move. Now what is happening? 3 green candles, 3 red candles. At best, what it may try to do, it may try to come towards 55 and close the month at around 58. That is a symmetrical candle to this. Move towards 55 or and close the month at around 58. We only have now 10 trading sessions here in the month left. So almost more than half the month is passed by. So one thing is clear, possibly the candle is going to remain red. That is very clear. And now that is why I say the possible movement in oil is going to remain range bound. It is possible that it can hit close to 55 and then bounce back, or possibly stay in the range for the next few sessions. So this is something you should be watchful of. Moving averages crossed over, trading with divergence and bearishness certainly is a bearishness indication. Now, next thing to note here is, see the drop retracement. Now, in the nearest time frame, in the, you can say, last couple of years or more, you can see oil prices are trading in this bearish channel. Now, it is very, very crucial for oil to break below 55. And what happens if it trades below 55? Now, below 55, see, ideally, the possibility of a movement towards 50 will be very, 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 very high. Why so? Yes, we had also seen lower lows here. Every time it has bounced back, it has hit lower lows. So now the lows here are aiming towards 50. And that is why I say a move below 55 will be a good indication for a possible move towards 53.5, 52 and $50 levels here. Look at a stochastic here, looking downwards, trading bearish. The MACD is consistently looking downwards, trading bearish. But yes, MACD is also delivering a good wave here, and possibly the bearish wave or the bearish part of this complete wave is over. It has to cross over. It appears what it may try to do: 3 green, 3 red, double bottom, and from here a possible reversal like this in the month of November or December. So I think 55 plus minus zero point 0.5 should be a greater hurdle, even if oil tries to take a drop from here. But breaking below this, you can just stay short. Breaking below 53.5, stay short for 52 or 50 as well. RSI looking downward, so slight bearish indication here. So now we have seen the charts and indicators. Time for me to give you the trading levels and strategy. And before I give you the trading level, if you're willing to learn this art of trading, do not miss to be part of my mentorship batch. The 35th batch starts soon. Register yourself now. Reach out to me for details. My Telegram and email IDs are there in the channel and video description. Those looking forward to a trusted partner which offers you a swap-free account, lowest spreads, no hidden charges, easier transactions and easier withdrawals from across the globe. You can find the recommended broker link also in the channel and video description. In the mentorship batch, remember, we are going to teach you all the tools, techniques and strategies, and these tools, techniques and strategies are applicable for anything and everything you trade from, be it indices, be it crypto, be it gold, silver, be it crude oil, natural gas, anything. So yes, do not miss to equip these skills and increase your winning ratio, rather I'll say. So reach out to me for queries. Now, where you should buy? I will recommend you to buy at 57.4 levels. Expect 57.8, 58. The first target zone, yes, achievable, easily achievable. 58.55 the next, 59.3 the next, 59.860 the last. If oil trades beyond 60, stay bullish for 61.1, 61.5, 61.8. This is going to be the most crucial resistance here, and beyond this 62.6. These levels are something which are going to be a greater hurdle for any upward move here in oil prices. At best, what it can try to do again, it can in fact move towards 60, 61, and then a possible reversal again towards 58 cannot be denied. So this is something you should watch out for. Up move is definitely going to be difficult. What I am expecting is a red candle here in oil prices, and hence we can either expect a range bound movement or with slight swings. Yes, on the downside now, I will recommend you to sell at 57 itself. Expect 56.6, 56, and then below 56 this time expect 55, 55.3 zone. This is going to be a very crucial zone, and then 54.4. If these levels are taken, if it trades below 54.4, stay bearish for 53.5, 52, and then 50 levels here. Yes, oil prices are going to break all the way towards 50 if it stays below 54.4, 55 zone. It is possible that it may take a little time, but yes, staying below this zone, more bearishness should prevail. What I am expecting is not such a great drop, at least in the coming week. Even if it has to trade bearish, the coming month will decide the direction it wants to take. And hence, take your trades and positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel, reach out to me for your queries. Join the free Telegram channel for live market updates and join the channel memberships here on YouTube to support the effort. Thank you. Have a great profitable trading week ahead and a happy weekend. See you tomorrow with the Asia and Europe session with more updates. Was that as well. Thank you.